Every morning at exactly 10 a.m. Eastern Standard Time, while most of you are pouring your second cup of coffee or checking your emails, something happens. It's silent, it's invisible, and it's lethal to your portfolio. For months, a strange pattern emerged. Bitcoin would be trading sideways, looking healthy, and then, at 10 a.m. sharp, the floor drops. 2%, 3%, gone in 60 seconds. You might call it market volatility. You might call it bad luck. I call it a crime scene. Because this isn't the work of a panicked retail investor. This is the work of a ghost. An algorithm designed by a company you've probably never heard of, but one that controls more trades than Bank of America and Goldman Sachs combined. Meet Jane Street. They are a quantitative trading firm, headquartered in Manhattan. They don't have a flashy CEO. They don't do Super Bowl commercials. But they are one of only 4 companies in the world authorized to create and redeem shares of the biggest Bitcoin ETF on the planet, BlackRock's IBIT. They are what the industry calls an authorized participant. In plain English, they are the middlemen between the traditional stock market and the digital world of Bitcoin. They have a superpower. They are exempt from certain short-selling rules that apply to you and me. But having a superpower is one thing. Using it to trigger a cascade of liquidations while the world is looking the other way, that's where things get dark. Because this wasn't just a series of trades. It was a trap set 3 days in advance. And you were the bait. Here is the ghost strategy. Step 1, buy physical Bitcoin. Step 2, open massive short positions on a separate exchange, betting that the price will go down. Step 3, wait for the lowest liquidity window of the day, 10 a.m. That's when the US market has just opened, but the volume is still thin enough to move the needle. Suddenly, the algorithm dumps a massive amount of Bitcoin all at once. The price dips. This dip hits what we call stop losses. Automatic sell orders set by regular investors like you. Like a row of dominoes, one sell triggers another, which triggers another. The price crashes. Your position is liquidated. You lose. But Jane Street, they just made a fortune on their short position. And the best part? They can now buy back that same Bitcoin at a 3% discount using the money you just lost. It's the perfect cycle. Rinse and repeat. Now, you might say, "Bull, that's just a theory." Is it? In July 2025, the Indian market regulator, SEBI, didn't think it was a theory. They investigated Jane Street for a strategy they called morning pump, afternoon dump. The result? They found them guilty of manipulating the Indian stock market using this exact same pattern. They froze over $500 million of their capital and banned them from trading derivatives in the country. But it's not just India. There are fingerprints in China. There are fingerprints in the collapse of the $40 billion Terra Luna project. The most terrifying part? The regulators in the United States didn't just miss this pattern. They might have authorized it. You see, the SEC gave these authorized participants special privileges to ensure the Bitcoin ETFs stay stable. But what happens when the watchdog gives the fox the keys to the chicken coop? The irony is almost too much to handle. Bitcoin was created to be the exit from a manipulated financial system. It was supposed to be the one asset they couldn't touch. But the moment Wall Street securitized it, the moment they wrapped it in an ETF, they brought it inside the house. And once you're inside the house, you play by the house rules. When you buy Bitcoin through an ETF, you aren't holding an asset. You are holding a promise managed by middlemen who have every incentive to see the price move in ways that profit them, not you. So, what's the takeaway? The ghost doesn't want you to sell. The ghost wants you to stay in the system, keep your money in the ETFs, and keep providing the liquidity they need for their 10 a.m. harvests. If you want to stop being the bait, you have to leave the trap. Self-custody, your own keys, your own wallet. The 10 a.m. dip might still happen. The price might still move. But if you hold the keys, they can't liquidate you. They can't force you to sell. You become the one thing an algorithm hates, a factor it can't control. My name is the Bull. Come for the finance, stay for the truth. Smash the like button if you want to see who's hiding in the shadows next week. I'll see you soon.